Hey traders, checking into the stock market today. So another big bearish reaction to fundamental information. So we have two candles that look fairly similar. Powell a couple Fridays ago, and today the CPI reaction, massive pullback. One of the strongest bear control days, even stronger than Powell Friday a couple weeks ago. So this is a long squeeze, which is the same as a short squeeze, except anybody that went long in the last few days as the S&P 500 grinded up, very quickly put underwater, and this is certainly shifting our probabilities notably. So inflation came in a little bit higher than anticipated, 8.3 versus 8.1, but that is leading to the assumption that rate hikes are going to continue, perhaps even accelerating, and so the market's selling off in response to that. It's a little bit frustrating for my trading style, just because for me, as a day trader mostly, I'm usually all cash for these notable fundamental events, and then I act in response to them. And so the last two times, daily lower highs were the most likely scenario. And so for me, it's okay, I'm scouting those daily lower highs and not wanting to have positions heading into these unknown events. But clearly this year, it's becoming more and more clear that need to position into these news events. Essentially, either sit on the sidelines and just accept that I'm going to miss big chunks of the moves, or shift my trading style. So we'll see what I end up doing, but that's twice now where new to be scouting the daily lower high, and by the time I get entries, a huge amount of the move has already taken place. So this morning I had a short order filled out heading into CPI. And what I wanted to see, as I said, if we see a spike up first thing, I am going to enter bearish on that spike. And it was just too fast. And by the time I would have clicked the button, we were already down over 1%, and it would have just felt like chasing. It would have worked out in hindsight, but had the order filled out, and I just wanted a little bit, I needed a little bit more time. I just couldn't react fast enough, is essentially what it boiled down to. So did end up getting a bearish position, but late. Late's better than never. So I was not interested in the bounce. I was not interested in the bounce because we had all of our major sectors dropping together. We had the dollar breaking bull. We had the VIX looking bullish. We had QQQ leading on the way down. Those are our four check marks, all favoring the bears. On the way up, earlier this week and the end of last week, all of those check marks were being hit for the bulls. Today, that obviously flipped very significantly. So the bear trade, before we go into our regular rundown here, bear trade for me was, on full bear control days, we often see midday, 15-minute, or hourly bear flags. This is a very common pattern on full control days. I learned to look for this because I learned to play it bullish when the market was bullish for years. Bull all morning, midday bull flag, continuation strong close. That was a bread and butter setup on a daily basis for a long period of time. We're in a much different market environment, and we've seen it now enough times that we know the exact opposite is happening. So on days when all of our major sectors are dropping together at the same time, and I mean QQQ, XLV, XLF, when they're all dropping together at the same time and it's full on control, scout those flags midday. And we had a rejection. I was choosing QQQ. We had a rejection from 15-minute EMA 12. That's when I was looking for my entry. We had a 5-minute uptrend, double bottom, and a bull break. The bull break over resistance didn't have much follow through. We broke resistance by 63 cents straight into a big 5-minute pullback. As soon as this 5-minute consolidation was that significant, I said, all right, I'm scouting a bear flag. We then ended up failing the initial resistance, held support, one more move up, and that's when I started to get interested. And I was watching on the 2-minute time frame, and I was watching this leg up right into 15-minute EMA 12, and then we had one more little double top there, double top by a penny, and then we started the 2-minute downtrend. And so I was saying, watching 15-minute EMA 12 resistances that are in play, QQQ rejecting initially, bears need to confirm a 2-minute downtrend to keep the hourly bear flag shaping up, and I grabbed an SQQQ entry, watching the 2-minute close, and that was the 2-minute downtrend confirming that made the rejection from 15-minute EMA 12 more convincing. And then from there, it was just full-on bear control for the rest of the day. And I'm swinging enough to be flat. I'm not swinging much more than that. I just prefer to take the fresh, clean slate tomorrow because we are pretty darn extreme. Bears certainly have confidence in favor here, but very extreme on the hourly time frame, heading into a key support level. Doesn't mean we can't break it, but I just prefer to not care what the market does for the next 13 to 14 hours. So looking at where we stand bigger picture, this is a huge win today for the Bears. We had the weekly higher lows set. We knew not to trust them yet because we had not confirmed the daily trend change yet. We didn't establish support on the way up. That's why trend changes are so important. When you change the trend, you're establishing support. You're keeping that imbalance between demand over supply favoring bulls. In this instance, it was just a straight shot up, mini FOMO, multiple gaps, and then giving it all back. And again, anyone that went long in the last 4 trading days, including today, is now underwater. So can we change the daily trend from here? Absolutely, but it is extremely unlikely. The retracement now is 90% or whatever it is. So if we drop down and break 388.42, it's another weekly lower high and lower low, and we will be looking back at fear lows from there. The narratives are, of course, inflation and rising or raising of rates. There's also some strikes to be keeping an eye out on. Railroad strikes, teacher strikes. And when we're in a sensitive market environment, that kind of, I mean, if fear is heightened, if you're in a raging bull market, okay, strike, whatever, doesn't mean a thing. But if you're in a heightened fear environment, in an area without a ton of supports, it's definitely just another narrative that can be latched onto. So keep an eye on that, and let's see if that narrative is latched onto as well. QQQ, same deal. So heading down towards the low, there are a couple supports in play to be watching, but if we break those lows, weekly lower high and lower low, and then looking back at the fear low from there. At that point, the only hope for the bulls would be a monthly higher low to try and form, which again is possible, but we're talking probabilities, and this is where the bulls had to confirm a daily trend change for the weekly higher low to form. So probabilities, I mean, between yesterday and today, for me, probabilities of are we going to head back down to the fear low shifted massively. And of course, we're just going to be looking for hourly lower highs to be the result of the next bounces from here on many names. Some names stood out well. Let's look at those names and then we'll go down the rest of the list. NIO, look at NIO today. What bear day. Just an absolute beast. We could see very quickly relative strength in NIO and EV names. Solar names. How did TAN end up? Still extremely strong comparatively. I mean, you look at, if you pull up a chart and you can't tell it's a big bear day in the markets, it's a bull name after a day like today. So, who did we just say? NIO, EV, solar, and uranium. CCJ. Bulls bought the gap down open. Not immune to the market weakness. We got upper wicks of some pullback, but it was bull control all morning while the market did nothing but drop. So what do those names have in common? They're all impacted by the Europe power, not commodities, wrong word. The Europe cost of power and energy, all those headlines. They're all in a group that is impacted by them. So it's very notable. We can say that they are positioned very well for the bulls if there's any broader market bounce. But we know the analogy that I gave yesterday is if the broader market continues to see weakness, that it's one of those scenarios where the river is going, the river current is going one way, and these bulls have a little swirl going on the side of the river, but they can only withstand the current for so long. And if fear continues to pick up, I mean, we weren't that far away from a limit down day today. If fear continues to pick up, then relative strength just means laggard bears eventually. So in short, the most important thing are these short-term daily levels on SPY and QQQ. Have to see an hourly uptrend to the bulls if we're going to have any confidence that those levels can hold. And if not, they break bear, the weekly lower high and lower low confirms, and we're looking back at fear lows with bears gaining a lot of confidence, then being back in full control of weekly and daily downtrends. Semiconductors, we know they've been weaker. Daily lower highs set convincingly. Break of that low, so we've already broken to that lower low. Fear low, 189.94 on deck. And this is just my example where, the amount of shares that I had short on NVDA yesterday, trying to set up for the daily lower high, I got to get the swing trade going. Yeah, that would have been a real big day. So bear break to lower lows on NVDA. We knew to be scouting that daily lower high. It just happened in a blink. So Tesla, not nearly as strong as NIO. Not nearly as weak as QQQ and SPY. Look at the retracement on the daily. We've got plenty of extra space, but it's a large component in SPY and QQQ, so certainly going to be impacted by that. So on a name like this, I would still be scouting for a daily high or low. But again, you got to be cautious because if the market re-enters some free fall and full-on bear control, with what we saw after Powell Friday, the full bear control for the week that followed, the question now is, does that happen again? Or can bulls defend support and at least put up a little bit of a fight? Healthcare, big old drop. Anything above 124.39 is a daily high or low, but at the moment, just a weekly lower high, shaping up, never confirmed the daily uptrend. Financial sector, never confirmed the daily uptrend. It's holding on better than SPY and QQQ. The retracement is not as significant. Pretty much need a green day tomorrow to even consider that market bulls can defend support. Not sure how you turn around sentiment after a day like today. IWM, same thing, big drop. There is space for the potential of a daily high or low compared to 177.50, but the bulls need to form that daily high or low very quickly, or we're going to head back down towards that level. So SPY and QQQ are on the weaker side of things. XLF, IWM, EV, solar, uranium still on the stronger side of things. Biotech sector, big old pullback. Anything above 81.09 will be a daily high or low. So again, still it's not game over, but definitely a big bulls ideally would have wanted to have seen 2 days of contained consolidation, 2 or 3 days to get down to where we stand now versus that free fall drop. Cannabis names getting hit in a big way, down 10% or so. Still possible for a daily high or low, but that sure looks like a head and shoulders trying to shape up. Actually, I take that back because this is higher than the head. So not exactly a head and shoulders there. MSOS, lead bear, USMJ falling apart a bit. Heading back down towards that fear low. Psychedelic name, CMPS was in a real tight range. It broke bear convincingly. So bears regaining confidence. CCJ uranium still in a daily uptrend. If daily EMA 12 holds, bulls keep their complete control. So again, we can say these names are positioned well if the broader market can find a bottom. That's just the big if right now that we don't have after how weak we ended today. Dollar bulls. Again, retracement of 60, 70%. We knew we had to confirm the daily downtrend. If not, it's just another hold of weekly EMA 12. And so at the moment, it's another hold of weekly EMA 12. And the simple statement is, bears keep confident in all places if the dollar is holding weekly EMA 12. When that is lost, we will just zoom out and scout a monthly high or low, but once that is lost, the shift will be underway. As far as something is changing, something is different. Look at oil. Oil did the same thing. Oil ran up and held weekly EMA 12. I was probably saying the exact same thing in these videos. Bulls have full control as long as blah, blah, blah. We held it for over 6 months, and then once it was lost, that was it. Top was in, at least for now. And that led to 4 months of pullback. So, will the dollar losing weekly MA12 lead to months of pullback? It's a possibility. It's a possibility enough to place some trades for that possibility. But at the moment, no sign of it. Metals, we had that 4-hour rising wedge on gold yesterday. It played out very nicely for the bears. We ended up holding support pre-market before CPI and then fell right through it. So weekly, looking right back at our base, that multiple year 6-touch bottom at 1680, 1670s, coming back into play. Silver held on real well as well. Didn't even get back. I guess we could say we gave back probably half of yesterday's move. So I would put silver up there with notable bulls. I'm also keeping an eye on copper these days. Copper is one of the stronger metals. Weekly MA12 still struggling. Copper's doing the same thing as Bitcoin, which is interesting. But look at the difference in these charts. Or I should say, the lack of difference in these charts. Wow, that must be every line I've ever drawn on Bitcoin. Weekly EMA12 rejection, higher low, second weekly EMA12 rejection. I mean, it's the same chart. Spike up here in March. There's a March bull move before rolling over. Very, very similar, copper and Bitcoin. Just a little observation. Oil. Daily, rejecting from resistance of 90.39, but still holding on fairly well. Daily consolidation has not really started yet. We did break the low of yesterday, but only by 10 cents. Bears would need to confirm an hourly downtrend for the daily lower high to convincingly be set. Still watching for the oil monthly higher low attempt, but bulls have work to do. And natural gas, daily bounce still playing out. Trying to set up the weekly higher low. Weekly inside bar is likely. Same thing, bulls have to see a clear trend change. If you go to the 2-day time frame and condense it down a little bit, the bounce at this point is very weak, and aggressive bears will be watching for this head and shoulders. All right. So, tons of volatility. This is a difficult market to be trading right now. The bears have more advantage than the bulls, but the extreme nature of the swings, fear to FOMO to fear to FOMO, makes it difficult to trade in this environment. So just be aware of that. That doesn't mean don't try trading. If you keep losing, stop trading. Focus on education and learning from this market environment. I mean, this market environment is, as I said recently, this is probably the least fun market environment that we've seen in many years. And that's just because it is more back and forth chopping around. There is not the hundreds of % blue sky breakouts that have happened in years prior with different sectors. So this is obviously, this happens in markets. It can't always be fun. But it also means if this isn't your market environment to thrive, that you're pumping the brakes and you're waiting and preserving capital to be able to strike whenever there is the next opportunity. All depends on your trading style. But again, if it's not working out, then pump those brakes and patiently wait for a different market environment. Because they shift. Sometimes they shift in a month, sometimes in a day, yesterday to today. Sometimes they shift over a few years. And we've certainly seen that in the crypto sector. Apple, forgot to mention Apple. Apple yesterday, short squeeze into a long squeeze today. Just an absolute 180 turnaround. Can't remember the last time I've seen that drastic a turnaround on Apple from massive bull to massive bear. Bears gained confidence this morning when Apple broke low of yesterday, because it was one name that opened above its low of yesterday. And so if we were going to see a bounce at the open, that level needed to hold, and Apple needed to lead the way, which would have helped QQQ lead the way on the bounce. But once Apple rolled over and joined Team Bear, it was full-on bear control from there. Hope you're well. Congrats to the Bears. Key daily supports in play. If they break, Bears affirm complete control. If they hold, we'll chop around a little bit, probably into next week. But we need an hourly uptrend if we're going to have any confidence that these daily supports are able to hold. Again, keep in mind there are some names that are still, even if SPY and QQQ break daily support, we're still going to be looking for daily higher lows on those names. So just keep in mind which sectors are standing out with some relative strength. And don't forget to do good things.